right there, everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. Really, Monday and Tuesday, the sessions themselves were relatively unchanged. You can see here Monday's candlestick and Tuesday's candlestick. They are really non-existent, more or less just continuing to at least tread sideways on the Dow Jones Industrial Average. The big mover today, obviously, was in response of the Federal Reserve. Cutting rates, 25 basis points. It wasn't enough initially for the market to actually rally. In fact, we sold off quite considerably today, down 333 points on the Dow Jones Industrial Average. We do not have that of a long day Morobozu candlestick. Interestingly enough to point out, we do have that of a lower wick. And again, if you pay attention to past resistance as new support, you can see here on my screen 26,731. That is from where my cursor is at the moment. If you pay attention to the L on my screen up here as well, that is taking into consideration today's candlestick. You can see it's 26,719. So again, very close to that technical sort of support area, or at least a very important critical pivot point. That's what we've been sort of paying attention to for the past couple of weeks. We have been looking for this market again to continue in its bullish ways. However, what is most important, to sort of point out at this particular time is the 50 rising exponential moving average. We've had periods in the past where we've spoken about this. We've also talking about the big C, the confluence of support. Let me just tell you what the confluence is. The confluence is the rising 50-day exponential moving average. It is also that of the horizontal support area that we did bounce on up into during the period of June over here, prior to, of course, breaking out. We could still be essentially, like we've sort of alluded to in the past, essentially going through that 1, 2, 3 back test. What is critical for these markets right now after the Fed has spoken? Again, somewhat disappointing, immediate anyway, active market participants with the 25 basis cut, as well, a lot of people anyway speculated about a 50 basis point cut to the federal funds rate anyway. But with the S&P 500, again, what's going to be critical amongst all three of the closely followed US markets is going to be the backtest of this critical support area. We've spoken about it in the past, both publicly and also privately. It's coming into, of course, where we have these open windows as well. And that will give us the three areas of confluence, right? The gap support, the technical past resistance as new support mixed with the rising 50-day exponential moving average. This is why we actually have these green rectangular boxes drawn on my screen, because this is ideally that position whereby you can re-enter into market positions to dollar cost average prior to the successful 1, 2, 3 continuation of the market to higher prices. So it looks as though, like we have almost already done during Wednesday's session, we've almost anyway retested the rising 50, i.e. we still have a little bit further to go until we close this open window. But the real battle, okay, a lot of people are talking about the battle between the 10 and the 20 exponential moving average. They are wrong. The real battle, or the most important battle, is certainly going to be down here around 2,925 to say 2,940 on the S&P 500. What happens in this general vicinity is very important to the I guess the consideration of the markets, or at least the direction of the markets over the next couple of months. What happens around this critical pivot point is very, very important. Again, on the NASDAQ, you can see 8,105 on my cursor. Let me just pause it there, 8,105. If I cover, or at least highlight the L and hold my cursor over today's candlestick, you can see 8,110. So we got very close to it. Okay, we actually were 5 points away from the candle and my past line during areas. And again, we're trying to close the open windows on the NASDAQ. Okay, we've spoken about 8,000 being that critical area roughly, because again, it is that psychological round number. It's also more or less where this open window is. So I've gone through where the open windows are on the S&P 500 and also where it is on the NASDAQ. When it comes to the Dow Jones Industrial Average, we don't really have a pronounced open window unless we go all the way back to at least this candlestick over here. This is on the 17th of June, which again would put us at about 26,250. And this would also give us that of the continuation of the intermediate trend, that next subsequent higher low relative to the period in where we were in June 2019. What I can say is that Wednesday, and based off today's candlestick, is that we have engulfed obviously the majority of candlesticks for really the entirety of the month of July. In fact, if I go to the monthly candle that we've actually concluded the month of July, you can see here we actually closed up 264 points, but this was looking very, very different as at the close on Tuesday evening yesterday. All right, so we do have a spinning top on the Dow Jones, on the S&P 500, another spinning top up 38 points, and on the NASDAQ we closed up 170 points as well. So again, mixed markets when you go out to the monthly time frame. A lot of this is taken into consideration what happened during today's session, that of the outside day type of engulfing candlesticks. But again, C for confluence. Past resistance is new support. You've got the gap support as well on some of the markets. Most noticeably at the moment is the S&P 500. And then you also have on top of that the rising 50-day exponential moving average, which should help propel these markets, along with, of course, the 1, 2, 3 backtest that we have sort of spoken about during the period in June. And then we sort of came to the conclusion, well, that may have actually been it over here, but potentially this is more of that material pullback that initially we were looking for once we broke above, all right, this all-time high resistance area. Now, a couple of stocks to recap. Apple today, or yesterday, in fact, had its earnings. It's gapped up today. Wasn't the best day, obviously, for Apple to report its earnings after the Fed announcement, but it was looking quite healthy. We saw a little bit of a whipsaw blow off top. This is why we wait for the individual candlestick to form. So what we're going to do very simply is put a continuation on Apple at 221.81. This is going to be a jump on in, no-brainer continuation entry. Otherwise, what you're going to look for, if I can remove this vertical line off my screen, is to close this open window, which may well truly happen as at the close on Thursday, okay? And we're going to look for a continuation order off from one of these rising exponential moving averages. We need a little bit of time at the moment, but right now, 221.81 on the upside is that continuation trigger on Apple. Outside of that, we have had a few other individual companies report. I'm just scrolling through the top 12 list at the moment. Baidu, again, really just lethargic. It hasn't done anything after its earnings candlestick. We're looking at a lot of these trades actually stabilizing, then turning the corner and continuing in their upward direction. ConocoPhillips is another one. Obviously, that reported yesterday. We have a nice outside day engulfing candlestick. You should be very much so excited about this. Not the weekly candlestick, but just the general vicinity where these, or at least where that outside day candle on the daily is showing up. This is the weekly chart of COP going back to 2016. And as you can see, we've got 2, 1, and 2 decelerating fan lines. Number one, we've held above for the majority of this bull run. However, in 2019, we have cracked and we've come back down on 2 occasions to actually retest, right, the establishment of the trend, which takes us back to 2017. So when you look at this on the weekly time frame, okay, obviously we still have a couple of sessions left in the week today, but we're holding around 59.08, which is very important. We're looking for that upward march off from this bullish second decelerating fan line. You can see on earnings, we have that outside day candlestick. Today, we have a little bit of a spinning top. Again, the markets were down quite considerably. But when you pay attention to the oscillators, okay, you can see that the MACD is rather lethargic. It isn't really accelerating down to the sort of into the weaker period, or at least below that net sort of neutral point. Okay, the histograms, in fact, are actually starting to plateau a little bit. And the RSI is just marginally below that neutral 50-point reading as well. The stochastics, although it's technically registering a sell signal, it is, of course, a very weak sell signal. And on top of that, right, we're very close to actually administering that of bullish divergence. So you can see that technically priced, it has still achieved a higher low, like we haven't achieved a lower low. But when it comes to the technical indicators, it's very close to achieving that of a higher low. So this has got all of the trademarks of a reversal, a bullish reversal, reversing that of a bearish trend into that of a bullish trend. So I'm really enjoying this trade. I mean, we're not technically in it, but I'm liking the sort of the trademarks, the hallmarks of this potential move over the next couple of months, depending on what the markets do. I'm expecting the markets, of course, to hold and to continue to rally over the coming months, if not for the entirety of 2019 and very deep into 2020. But when it comes to COP, I'm going to keep the trigger at 60.31. Okay, very important about that trade. It's a fantastic reversal trade. It's something that may not trigger today, not today, tomorrow or this week, or maybe even next week. But just be sure to pay attention to price action around that pivot that I just described to you. Okay, it looks like it is a trend reversal under construction, and it's been happening over a number of months. We've got Disney holding up above 143, which is fantastic. Well, actually, it's just above 143, but really what I've been eyeing off is, of course, this resistance area turns support at about 151.60, 141.60. You can see we've done a couple of gyrations. Wasn't helped today by the market as a whole. However, we are still technically trending above the exponential moving averages. When I bring up the CCI and also the ADX indicator, although they are resetting, the CCI is still favorably strong, just below 90 at the moment. So it is going to be most likely a bit of a slow and very gradual grind higher. We've spoken about this, just recapping it, however, down at $1.92 today. I wouldn't be all that concerned about it. No trade in Google at the moment. We've just been allowing it. It looks as though, by the way, that Google is, or at least trying to anyway, close the open window down to about 1,150. We'll pay attention to that, or at least continue. We don't have a trade on IBM. We still haven't moved above 152.50. Again, pulling back. It was looking like a bit of a stair step. Now it may be sort of morphing into at least a retest of course, the rising 20 or even the 50. You can see the reaction off from the rising 20 today. Again, no real trade set up apart from 152.50 on the upside once it triggers. Microsoft is sort of falling into the same category as Disney. You see how Disney has been flinching above 143.83, but closing pretty much on the nose at 143. Well, the same is true for Microsoft. Flinched at 140, 120. We've sort of hallmarked or labeled this as the ideal spot to enter, much like what we have on the markets themselves. Remember these green rectangular boxes on my screen? Well, the same is true for Microsoft. We're still in a confirmed bullish upward trend. All right, we haven't actually reversed anything. We're just sort of at the whim of the market and the volatility of the market noise, all right, which today anyway was beating as loud as a drum. So expect Microsoft to potentially fall on down to 132. However, I am not concerned about this. We're still looking at the continuation of Microsoft and the Netflix, the market itself, the indice to move to new all-time highs and to set up again the continuation of what is that of an established trend. Netflix still flinching around 332. We're at 322. We were talking about market noise. Again, we've drawn parallels between this and Google. Go back to my Google analysis. Okay, it is public. I'll go back and show you it. You have to go through my YouTube playlist, all right, on my past videos. It would have been somewhere around this general vicinity over here. And we were talking about, right, the neckline, the higher low, and then the breakout of the neckline to establish the trend. Okay, what is going on Netflix looks awfully similar. You see how we've sold off, we got the gap, we've come up to the neckline, we're selling back on off. If we set up a higher low relative to this little swing low over here, you've got the neckline defined over here, and this is going to fill the gap up at 365. Really like the odds and the probability of that trade. This is now the pullback and the establishment of that second, sort of the lower, or at least the higher low when it comes to the double bottom of itself. Okay, the exhaustion of the sell wave pressure. So I hope that's going to help you. As at the close on Wednesday, again, very slow Monday and Tuesday, but today the market's really got moving. If you have any questions, email me, success@pivotpoint-trading.com. Otherwise, I'll see you later in the week in another public update. However, I'd like to also see you in that pro analysis class, which we do each and every Saturday. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.